ऋतिका, ऋतिका, ऋतिका। आप ही तो हो अपनों का सबसे बड़ा भरोसा और आपके भरोसे के लिए
मैक्स लाइफ इंश्योरेंस।
You are the difference. ऋतिका, ऋतिका। Hi. ऋतिका। ऋतिका, 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 ऋतिका। आप ही तो हो अपनों का सबसे बड़ा भरोसा और आपके भरोसे के लिए
मैक्स लाइफ इंश्योरेंस।
You are the difference. ऋतिका, ऋतिका। Hi. ऋतिका। ऋतिका, 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 ऋतिका। आप ही तो हो अपनों का सबसे बड़ा भरोसा और आपके भरोसे के लिए
मैक्स लाइफ इंश्योरेंस।
You are the difference.
Good afternoon, everyone, and a very warm welcome to all of you. Today, I have the privilege from Max Life to present to you a webinar that is so unique in its own terms. It is the Wellness Insurathon. Have you heard of that before? I don't think so. I hadn't. So let me give you a little bit of context of what we are doing today. Wellness Insurathon is a unique concept that we bring in from Max Life Insurance, in which we are talking about three topics which are extremely close to your heart. We are talking about how you can keep your finances well, how you can keep your family well, and of course, how you can keep yourself well. In this series, we are focusing on three webinars which lead up to the World Heart Day, which is on 29th of September. So today, we are meeting to talk about the financial wellness. And tomorrow, we meet to talk about wellness in women. And on Monday, we meet again to talk about the physical, mental, and overall well being that matters to most of us. All these webinars, guys, are on the same time, that is 3 to 4 p.m. So if you've not registered for your webinar, my request to you will be please go ahead and click the registration button and be aware of what all that you need to do to keep yourself financially well. Starting today's session, before I welcome my panelists, let me set a little bit of context. Now, what is financial wellness? What do we mean when we talk about being financially well? Are all of you suffering from the rising cost of living? I know I am. My salary isn't increasing enough for me to meet and beat the inflation. People who have kids, all of us know what is the pain that we feel when we see that education fee is rising every year. And lastly, God forbid if you're sick, then 14% around is the inflation on which health and wellness is increasing. Isn't that quite a lot? To talk about this, we have today with us Miss Neha Nagar, who is a well-known power girl. She is a financial influencer and she is making her waves in giving people knowledge on how to simplify finance. Welcome with me, Miss Shalini Kohli. She is a wonder house in herself. She is a financial coach. She changes the life of millions of whom she touches. And lastly, but not the least, we have Mr. Chinmay Bade from Max Life Insurance. He's a corporate vice president managing products and channels. Welcome, my panelists. A few words before we start from Neha, Shalini, Chinmay.
Thank you so much, Subarna. Thank you so much, Max Life, for inviting us, for having us here today. And I am particularly very excited for our conversation today. It's a very important topic, very crucial, and everyone must be aware about financial and mental wellness. So yeah, kudos to Max Life for these initiative, and I'm very excited.
Thank you so much, Neha. Before we get into the questions, quickly I would ask the audience to see that there is a rating button on your screens. Please go ahead and rate us. Your feedback will only help us become better. You can also ask your questions to any of our panelists. Just put on your name and the question. And at the end of the session, we make sure that we ask all these questions. And also you will see a download certificate button. Once you attend the webinar, please don't forget to get your personalized certificate signed off by none other than Rohit Sharma. Now let's begin. Neha, my first question to you. When we talk about wellness, I always think about, health, fitness, mental wellness. What is financial wellness?
Okay, so first of all, again, thank you so much for having us here. So, financial well-being is very, very important today, but before we talk about the importance, we should learn about what is financial well-being. So, let's start talking about it. So, financial well-being is about how well your finances are, how much in control you are of your finances. Since childhood, we have been taught about how to earn money, right? But we haven't taught about how to manage money once we earn it. So that is a big challenge we have already faced. That is a big problem we have already faced. And that is actually very sad. Since our childhood, we were trained to work for money, but never taught how to manage money. This is something we should worry about. Even in Bollywood movies, if we take reference of any movie you must have watched in 90s, all the people who had money were shown the negatives, the evil people, because they were shown like, if a person is getting rich, he must have done something wrong, like जमीन छीन के अमीर बने हैं कुछ लोग, फिर वहां पर हीरो आता है, वो हीरो फिर लोगों की जमीनें बचाता है। तो वो दिखाया जाता है कि कैसे पुअर लोग अच्छे होते हैं, दूसरों का भला करते हैं, एंड जो अमीर लोग होते हैं वो दूसरों का कुछ गलत ही क्या होगा तभी वो इतना बने अच्छे बने हैं। सेम विद अंबानी, वो भले ही कितना छोटा परसेंटेज अपनी इनकम का अपनी बच्चों की वेडिंग पे स्पेंड कर रहा है, बट उसको नेगेटिवली देखा जाता है, बिकॉज वी वर नॉट टॉट राइट थिंग्स अबाउट मनी, कि कैसे मनी इज अ वेरी बिग टूल विच कैन मेक योर लाइफ very well. So I have 5 questions with me right now, which can actually decide if you have a healthy relationship with your money, if you have control over your money or not. So number one question, everyone must ask themselves: do they know their net worth? Net worth is asset whatever you have of your own minus liabilities, जो किसी और का है, जो आपको वापस देना है। तो मोस्टली 99% लोगों को ये पता ही नहीं होता कि उनकी नेट वर्थ कितनी है। Then the second most important question must be, what are your goals? Where are you right now and where you want to go? Like if you want to buy a bike, a gadi, a car after 5 years, then you should have a proper plan for it. Third question should be, do you have any emergency fund? Like situation like COVID or any other virus may come again anytime soon. So we should have an emergency fund of 3 to 6 months with us, which can make us mentally peaceful about future. Ki, okay, if somehow because of the layoffs happening in the world right now, because of the economic instability, because of the war going on among big countries, if somehow if my income gets stopped, then I will have something in backup for myself for 3 to 6 months. And after that, we should ask one more important question, that we should have our insurances in line with us. So we all must have health insurance, whether your age is 1 month or you are 70 years. Everyone should have health insurance. And second is life insurance. If people are earning and they have dependent, they must have life insurance. So if your situation is sorted according to these questions, then only you can say you are financially well, and you may find good track to make yourself financially independent. So financial well-being is not about you are independent. Financial well-being is about how in control you are of your finances, and how much you know in future you will be able to survive even if something bad or negative happens with you.
That's a great perspective, Neha. I think today I'm going to go back and think if I know the answers to any of these 5 questions. That's a great, starting platform for all of us to keep thinking. My next question again, Neha, is to you. That you are a millennial, you are a power girl who's made it, made it big. How did your journey begin? How are you managing your finances? Anything differently that you're doing for yourself?
So I was a financial advisor in IFL Wealth Management Company in 2019. Prior to that, I was trying for chartered accountancy course, but I couldn't clear it. But the time I got the job at IFL, I got introduced to a different kind of world, that you have to well prepared for everything. You have to start investing, and that was something which was not taught to me at my home or at my school. So I started learning more about these things, and I started meeting my clients who were HNIs, ultra HNIs, and I realized that you have to take your finances in control. Then only you will be able to outperform in your job or business, or even in your life also. So financial well-being is not just limited to your finances. It has to do something about for your entire well-being. So if you want to do well, you have to take control of your finances. So that's how I started. That was my story, how I got into financial world. And now how I'm how am I handling my finances. So these 5 steps I always keep repeating, that you should know your first net worth, where are you currently, your income, your expenditure. You should keep track of everything, whatever you're doing with your finances. Step 2 should be, you should set smart financial goals which are achievable and realistic. Like if you're saying कि हाँ मुझे financially retire होना है जल्दी, this is not a good goal. You should be like कि अच्छा ये वाला काम करके मेरे पास second source of income आएगी जिसकी वजह से मैं इतना saving कर पाऊंगा, मेरे expenses कम हो जाएंगे, 2035 तक मैं फाइनेंशियली फ्री हो जाऊंगा, डेट मेरा कम हो जाएगा. दैट इज अ स्मार्ट गोल. तो ऐसे गोल्स आपको सेट करने होंगे अपने घर के लिए, गाड़ी के लिए, जितने भी आपके कमिंग एक्सपेंडिचर है सभी के लिए. एंड देन नेक्स्ट स्टेप शुड बी कि यू शुड सेट योर इमरजेंसी फंड विच शुड बी 3 to 6 टाइम्स ऑफ योर मंथली इनकम. जब आपके पास ये हो जाएगा, देन यू स्टार्ट looking for insurance also, health जैसे I recently talked about, and then life. And then you should start investing for your future goals. अब goals के लिए जब आप investing चालू करेंगे तो it shouldn't be like कि आपने 20,000 रुपए बचाया और 20,000 SIP में डाल दिया. तो एक तो डाइवर्सिफिकेशन भी नहीं I do financial planning for myself, for my family, that we do financial planning goal wise, not like you have saved this much and you're putting it in this and this and this and 3 4 products. So that will not work in the long run, because at the end we want peace of mind with money, we with whatever money we have. एक गाना है ना वो, रुकी सूखी रोटी तेरे हाथे से खा के आया मजा बड़ा. So that should be our well thought कि whatever we have in our plate we should be happy about it, but उसको हम अच्छी तरीके से manage कर रहे हो so that वो peace of mind भी हमारे पास आ जाए.
That's an excellent thought, Aneha. Goal-based planning, so that whatever we get, we are able to manage that very well. Shalini, my next question is to you. You go out and meet so many customers. Are you seeing that the Gen Z millennial crowd, are they aware because of their finances, considering they are the consumers of the next generation? Do you see that kind of awareness in that generation as today? I think we are facing some tech issues.
Am I
which-
audible? Is my
Yes.
voice audible?
Yes,
Because
yes,
I
yes.
see a unstable connection happening here. So, first of all, thank you for inviting me for this panel discussion. Subarna, I've seen a great evolution happening in on this front. What Neha spoke about, it's very nice to hear from the millennial that this is how they plan. But yes, you're going on the right track, Neha, and the new generation is because of there is a lot of advancement and adaptability towards digital platforms. I've seen them things evolving in the last decade. I've also seen children the youngsters having more options of investments and savings. But the crux to everything is first protection. Why? Because if you see a financial pyramid, why is financial pyramid as an architecture the strongest and the most stable? Because it has a strong foundation. So to any financial planning, if there is a strong foundation of protection, be it health, be it your life insurance, because these two protections will reserve or conserve your unearned, net worth, the money which you have not created yet. So, for example, that if a customer of Neha's age is going to produce some 100, 200 crores of wealth through her smart planning, her goals and all, if her health is not by on her side, or if life doesn't give her a chance to survive all these years, this money has no worth and it might not get created also in her absence. So the foundation to any strong financial planning or a financial pyramid is first protection, and then of course working on your goals with various asset classes and achieving them. This is what I feel is the right way, and this evolution is happening already. Children are more adaptable to digital platforms. They're more keen to learn, and they're also investing through various options. They are aware of this I mean, asset classes and the market availabilities they have. So it's happy to see things happening, but yet there is a lot to be accomplished in the longer run. I mean, they are on their nascent path, to which is going to lead to a more evolved and more well-informed society of who are going to be our future, generation who's going to take over the charge.
Great, Chalini. And also, by and large, do you see Indian consumers being, well thought through when it comes to their financial planning? Are they actively thinking about financial well-being?
Yes, they are thinking about financial well-being, but I still see a lot of gap because to them the short-term gratification is more high on their heads. There is a behavioral shift which I have seen, I've experienced with this class since I work with, the second generation also now. I see a behavioral shift. The parents were more conservative with a vision to create long-term financial wealth for themselves. The youngsters are more concerned about today's gratifications. With the result, they are more exposed towards, equity stocks. So anything overboard is never good. So what I'm saying is that the balancing part is yet what they need to learn is that why a particular asset class or a structure is important, which I think that part is still missing. And I think they will, as they become more matured, they are with more responsibilities. This relationship with their money will also improve accordingly. This is what I feel.
Okay, so we are hoping that consumers mature and they understand what is that relationship.
Suparna, it has to do a lot with their age and their emotion. I don't blame them because the emotional world is like that, more, spendthrift in a manner that, as I said, their current gratification, short term gratification is more important to them. Enjoying a vacation abroad or buying a high performing vehicle is more important to them than their long term retirement goal or probably their or a financial goal for their future is not important currently. What is they're looking at the current 4 years, 5 years. They want to live nicely and they live with this that filmy what is that movie Kal Ho Na Ho types. They will live with that kind of a feeling. I personally feel because I have children of Neha's age, so I have realized that this is their thought on money.
Perfect. So we are getting Bollywood references when it comes to financial well-being. Neha, my next question to you is: since you are so popular on Instagram and all the other social media handles, what are the current financial trends, so to speak? We have trends coming in for everything. So, are there any certain trends that comes to when it comes to finances per se?
So as Shalini was also speaking about that current generation is looking for instant gratification. Why? Because earlier generation was about they have to earn money to survive, right? So they have to fight for very basic things. But then the next generation already got the very basic things. So what they are lacking is they lack the purpose to save for. They lack the purpose, they lack the motivation, they lack the knowledge or the skills, because current generation does not have the skills required to grow their money or to grow in their career as well. Because when I myself go for hiring, even for the basic things like video editor or writing also, we don't find good number of good applicants. We get 300, 400 applicants in just one single posting, but out of those we cannot find one or two good people to work with in the long run. So this is the situation right now in the current generation. But thankfully, because of the finance influencers, because of the campaigns like this, the financial awareness is rising, because of which mutual fund specifically has gained that much popularity, that even if a student is not earning and they are in college, they also has started SIP of 500 or 1000 rupees. So now more and more people are watching my videos, these campaigns, or because of the digital boom as well. Earlier we only had 600 a smartphone in 2021. Right now we are going to 900 smartphones as well. So because of this digital boom also, people have access to knowledge, people have access to easy applications also, because of which uh, investment in products like mutual fund is rising crazily, like heavily, right? Prior to COVID, mutual fund penetration was around 3 to 4%, but now it has gone to 10%, 10% plus. So this is the current trend which is going right now in the new generation. Apart from it, insurance is also getting traction post pandemic also. Primarily because people wanted to get health insurance to save themselves from uh, medical expenses, and medical inflation is rising 14% every year. That is actually a huge number. So retail inflation is 6-7%, and people plan their finances according to the retail inflation only, but they don't know that medical inflation is around 14%. So that is a lot actually. And even education inflation is also 14-15%. So there are different kind of inflation rates, and we should make ourselves aware about those inflation rates. And even like ma'am was talking, even our household debt has been rising just like Western country. India is also moving towards a nation where taking loans is completely normal. Earlier debt was taken only when there was a big necessity, in case of emergency, right? But now 70% of cars, 70% of iPhones or smartphones are on EMIs. Now, no, so earlier that was the case, like housing loan had lot of percentage, but now non housing loans are growing faster than housing loans. So that is the current situation, because of which RBI governor also gave a statement कि भाई loan लेना बंद करो, कम कर दो loan लेना. So this is the current situation. Economic instability है और चीजें सही नहीं चल रही है, debt situation बढ़ रहा है, but still people are not taking their finances very seriously. ज़्यादा से ज़्यादा SIP चालू कर देंगे, but वो भी एक ही चीज करे, उसमें diversification नहीं करे, allocation नहीं कर रहे हैं. So we need to actually make them more educated, financially literate, by doing these campaigns, by making more videos, by building more distribution for these kind of products like insurance, mutual funds, or stocks. Then only we will be a financially literate economy, and then only we'll be able to grow faster.
Perfect, Neha. Thank you so much. Chinmay, we finally have you, live. Welcome. If you can just unmute yourself, Chinmay, that would just really help us. Perfect. Chinmay, we've heard Neha talk about, financial instruments like mutual funds doing really well, while there is some awareness of life insurance. Now, as a customer or a consumer, what does life insurance, give? What does it have to offer to everyone? Is it only about, getting an instrument once you've passed away, or is there more to a life insurance policy?
So, Subhana, I mean, it's all about the perspective that you look at. For example, life insurance can be seen as an instrument to cover death or eventuality, or it can be rather seen as securing your happy moments. So there are so many happy moments in life. Yeah, the life is a roller coaster ride. There'll be good and bad events. You need to plan for all the good events which are known, your kids' education, family's well-being, your own retirement, etc. At the same time, you need to secure it for any unfortunate or unforeseen event. For example, and it's so true, and I think Neha and Shalini, both of them spoke about this, that today's generation is all looking at instant gratification. Instant gratification, the credit is easy, e-commerce is available, spending, there are so many avenues to spend, etc., etc. But they need to understand or realize the power of financial planning or starting early, right? For example, if I was just put a number, so why wait for few years? Just few numbers के समझते हैं इसको. For example, somebody starts working at age 25 and retirement age is 60. If one was to put X amount of money every year for next 35 years, and there's another gentleman who starts 5 years late. So the first gentleman, he will have 35 years in hand. The other one, he will have 30 years in hand. And friends, the amount of money that can be accumulated by age 60 would be 1.5x for the one who started just 5 years early. And if this guy who waited for 5 years, if he was to match that corpus, he will have to put 1.5x the amount for next 30 years. So 5 साल जल्दी शुरू करना है या 30 साल तक 1.5x amount रखना है. So that's magic of compounding, power of starting early. So that was one why you should start early. Now, looking at life insurance. Now, life insurance is all about all golden moments of life. So and there are two primary risks. One is living too long. Living too long is also a risk. पहले होता था लोग 25-30 साल काम करते थे. Post retirement life used to be around 5-10 years. Now the retirement life, retired life is typically longer than a working life also at times. The second instance could be early death. If the breadwinner is not there around, then the family's financial position gets a hit. So इन दोनों चीजों को सिक्योर करना बहुत जरूरी होता है, and that's where the life insurance comes into play. So life insurance, what it helps is, of course, you can select your own financial instrument. Important start now, but what life insurance can uniquely do is all about whether you save and protect your milestones or you protect first and then start saving. Again, a simple example. If you were to look at a specific milestone in life, and if you were to save for something, you can pick any instrument and start saving, say SIP or mutual fund or whatever. You put that money, it will keep growing and you will achieve that financial milestone that day, 10 years, 15 years, whatever. But conditions apply. What's the condition? You need to be surviving till that moment. Life insurance, what it offers is that creates that asset on day one, because there's a sum assured or insured amount which is paid to the family in case the person is not around. So life insurance in nutshell is all about saving those precious moments or securing those precious moments or good moments in life, not just about eventualities. And starting early is very, very important.
Great, Chinmay. Thank you so much for giving us a comprehensive understanding of life insurance, what it has to offer. So Neha, like we spoke about goals, and Chinmay spoke about retirement. Do you have a retirement dream? Let me ask you that.
I actually don't want to retire. I want to work till the day I sign off. But the traditional retirement age is 60. So I want to work beyond 60, but I have some goals which I want to achieve, like from before the age of 35. Like I have to have my own team which can help me build creators. So right now I'm also running an influencer marketing agency, DigiVisal, in which we manage creators. So I have some goals for that agency. Like I want to build that agency. Right now we have only 15 employees. I want to have 100 employees. So I have different kind of goals. But as you talk about retiring early, I think in India uh, uh, early retirement is not possible for everyone, because nowadays people are getting married in their late 30s or late 20s, after 30, and maybe after 5 years they will plan to have a child. Then also they can't retire. Then by the age by when their child hits 20 age, they will be already 60 or around 60. So then also retirement is not possible, and their parents will also be requiring some financial aid for them. So financial रिटायरमेंट जो एक हमने एक नोशन क्रिएट कर दिया कि अर्ली रिटायर करना है, वो बहुत ही कम लोगों के लिए पॉसिबल है. ओनली 1% या 2% लोग विच हैव हेल्थ वेल्थ फ्रॉम फैमिली, या उन्होंने अपनी इस लाइफ में कुछ ज्यादा ही वेल्थ क्रिएट कर दी है. बट फॉर majority of Indians, early retirement is actually not possible because of the current situation, whatever is happening around the world, economic instability है, inflation rate बढ़ रहा है, and whatever the situation is, early retirement is not possible. But what I aim for, that I stop working for money as soon as possible. It may be 35, it may be 40, it may be 60 also. So I have some responsibilities, like I have a daughter also, I have a cute family, and I live with my in-laws. I have my parents also. So I also think about their retirement also, their financial independence also. So I may be achieving it in next 5 years, or maybe 10 years, or maybe 1 year also. But I do not plan to retire even after that.
Perfect. That's really amazing to hear. Before we move on to the next question, I would just quickly remind our audience to rate us And so to also keep asking your questions, please, they are very important and we will get to them at the end of the session. And also, please, please, please download your certificate. Now, moving on, Chinmay, my next question to you is that Neha spoke about her lovely family, her daughter, her in-laws. What does life insurance have to offer to Neha so that she can secure everyone in her family, and then be at peace?
Sure. So, God bless everyone. But at the same time, there are unfortunate events or uncertainties around life. Right? So, life has a if in between, in the middle, right? And secure that if is something that probably life insurance come handy. So at Max Life, we talk about the concept of CPRS. So there are four goals or four ways in which you should secure your plans. So number one is about kids. So C for child, one needs to make a secured fund or create a fund or start creating a fund for the kids education and kids marriage. Kids education is, I think, more important. And today, if you look at the rate at which education loan is growing, it's crazy. And one has, like, मैं कई बार बात करता हूँ इसके बारे में, that was your kid went for higher education at age 21, so you had 21 years to plan. Why education loan? आपके पास 21 साल थे. So you have adequate time. It's just to need to plan, right? Next is protection. Think of an unfortunate event. Don't get worried, but just secure that event. Just make sure that your family's financial plans or their financial milestones. For example, I talk about that the financial milestones of the family will not change if the breadwinner is not around. Even if the breadwinner dies, the kids will still go to school. They will still go to college at 17 or 18. They'll still go for higher education at age 21. And whether the parent is there or not, I think you before you is something which is very, very important. You after you, sorry. Yeah. So it should be me after me for my family to take care of their financial well-being or their protect their financial status, so to say. Next is R, which is for retirement. And retirement is all about a happy life. And like Neha rightly said, that beyond the age, I would like to work, but not for money primarily. That could be just to keep myself busy or what I enjoy. So money may not, and can we do something to make sure that money is not the primary motivation or reason to work beyond certain age? And one can, of course, plan about it. Yeah. And the last one is saving, which is saving for specific fun and milestones in life, right? Kids education, kids marriage, buying a house, having discharging the duties, getting kids married, etc., etc. And for this, what life insurance companies have to offer are the products which are ranging from 100% guaranteed products to part guarantee or minimum guarantee to market link plans or unit link plans also. So you can define basis your risk appetite, which way you want to go. The best way, I think both Shalini and Neha spoke about that, is diversification. You need to have a right balance or right kind of a balance between guaranteed, fully guaranteed, partially guaranteed, and market linked instruments to make sure that child, family's lifestyle protection, retirement, and saving for milestone is taken care.
Perfect. And I really appreciate the fact that life has an if in it. I did not think of that till today. I think that's a very big learning that, I am going to take from here in my life. Neha, my next question to you is that you are a self-employed person, somebody like me, our Chinmay, our salary. Do you see that there's a difference between how these two classes plan their finances? Neha, you're on mute. You'll have to unmute yourself.
I think salaried class start investing as soon as they get the job because of the EPF or because of the surrounding. But the self-employed people try to invest more into their business first and maybe building their business for first 10 5-10 years, and they start later on when they have a good amount of money, and they think, okay, let's call some wealth managers or let's call some bankers and they can guide me about where to invest. So that is one kind of approach for business, self-employed professionals. And for the people who are salaried, they start investing very early on, like from the day of their job, they get the health insurance also, they got the EPF investments as well, and they try to invest in mutual fund or through the companies also. There are different type of campaigns run by companies itself for their employees to educate them about the products and everything. So they start very early on as compared to self-employed. And self-employed also kind of delay their health insurance, life insurance also. uh, they delay their life insurance also when the most important or the first thing they should do is getting a health or a life insurance, the foremost, because everything depends on them. Because if they are not doing well in health or in life, everything will get shut down. So this is the primary thing they should do.
Okay, so this is very, scary to know that anybody who is self-employed is not thinking of their health or their, life per se. Shalini, my next question is to you. What is your take on this fact that, self-employed trust is not looking at their life insurance as a, as the first instrument that they should buy?
Okay,
Could you explain that as
the
well?
self-employed class, because they are so focused on their current businesses and building up their, as Neha said, that her goal is that she wants to expand her business. There are professionals involved who can help you. I mean, professionals like us and many more. And I think there are more superior and more learned people also around who are experts in helping you grow your net worth along with protection. That's what is the job of a financial coach, first of all. He makes sure that you take the right moves with your money and you're protected well. Also, along with while making the money grow 10x, 5x as per one's goal, right? So they now people have become open. They are calling us on these things and asking us, okay, sit with us to make my money work better for me and guide me what is to be done. And they are very open even to take guidance on protection. They are reevaluating their current stuff. I think the new era, the new group of people, especially the Gen Zs and all who are starting startups and all, they are very open to these discussions. And I'm liking this evolution which is happening around because it is scope for everyone to grow. They are financially growing, making this world a better place. Of course, our country a better economy, right? I'm sure the data which recently got released on small caps and all, you must have been reading all this, how we have surpassed China. This is it's a great, signal for the growth which our country is heading for. And I think self-employed are equally well versed. That 60 plus category, now their children have taken over the business and they are doing all the necessary stuff to, learn the new techniques, the new ways to grow their money.
Okay. And Shalini, when it comes to men versus women, do you see, women becoming more aware about, financial well-being overall? Are they decision makers? What's your take on that?
This is my favorite subject to talk about. You know, I always encourage women if they are not participating in the financial planning, whenever we sit with our customers, this is my first step. I make the financial report and take a yes consent from the women of the family first, even if she's not aware. I teach her, make her learn that what this subject is all about. Definitely, the new generation is more smart and intelligent, I would say. They are more well versed with their finances. They know how to manage them well, and women are equally strong. In fact, it's the women who pushes the men in the family now to take probably take such instruments, and they are leading now in the family also. If we sit and we are working together with couples and family, we align their goals in a manner that they become they're working together towards a goal. So the women is also contributing and the man is also contributing to it. It is always a successful, I would say, deliverance, if the couple works together towards a goal, because it matches beautifully, complements each other beautifully if the women is involved. And yes, women are equally participating and they're liking it also.
I'm very glad to hear that women are participating and they're liking. Chennai, does life insurance offer anything for women specifically as a group?
Yes, Suvarna. So There would be women-specific incentives to enter into insurance. For example, in Max Life, we offer discounts to women life because technically women have a better mortality as compared to men. The death rate is lower in women, and therefore a term policy, for example, for a women is a little cheaper as compared to men. Typically, 2 to 3 years younger men equivalent is what the premium will come around. So it is important. At the same time, if you look at the broader spectrum of insurance, there would be policies which will cover women's specific illnesses also. So I think that's something that they need to look around. And just one thing to add on the insurance and business people or self-employed, I think there are two unique opportunities which insurance can offer, and people like Shalini are onto it. So there's something called as business insurance. So absence of key people in the organization can suddenly create a void or can lead to a sudden slowdown in profits or even vanish also. And therefore, there is something called as keyman insurance, which can help you get that extra buck to make sure that the transition period where you get the new person on board, etc., and he comes in after the one is not there in because of an unfortunate event, the company's financials are not taking a hit. That's one. And B, for self-employed, especially there's something in law, which is Married Women's Property Act, which is for men, but for the benefit of women. So it creates an encumbrance-free asset. Just like a provident fund, no creditor can touch that money. In case the businessman was to die and he had to leave behind some debt behind him. So a policy booked under Married Women's Property Act is something which is secured for the family. It is created solely for the family. So families are also secured. So those are two additional avenues which one must look at, especially when they are self-employed or into business.
Okay, that's very interesting to know that, life insurance as a space offers something exclusively for women. Chinmay, in the past, I heard you talk about, market-linked plans. ULIPs is what you had used at the term. Because market-linked, in my mind, brings some risk in it. So do you think it's wise, like Neha spoke about uncertainties happening? Do you think it's wise to sort of stay invested in plans like that?
See, I think market-linked instruments, well, people look at it as short-term, but view of anybody who has been investing would be their long-term investments. And if you stay invested, stay put for 8 to 10 years or more, the reasonable expectation could be a return equivalent to, say, inflation plus repo rate. In current parlance, it was 12-13% is kind of return that one can expect. And there are two important principles that one should follow if you are looking at ULIPs or even mutual funds. A, if you understand the markets well, if you understand how or you can predict or reasonable confidence into predicting how the markets will move, use switching or move funds from one to another. If you are not that confident, invest and stay put. Stay put for 8 to 10 years, 12 years. The probability of downside, it reduces the longer you stay put in a policy. So unit-linked, market-linked plans, are they good? Yes, depending upon the risk appetite. But the mantra to success or lowering the risk of downside is staying invested longer.
Okay, staying invested longer. And Chinmay, just a follow-up to that, we talked about funds. Now, if I've already bought a policy and I see that my fund is not performing, do we have options to change or switch funds in the middle?
Yeah, sure. So that's switching, which I spoke. So switching, what is switching? So in insurance policy, unit-linked insurance plan, what we call ULIP, typically we'll have multiple funds, 8, 10, 12, 15, depending upon different products. They will have multiple funds, and the funds would have a different kind of a risk appetite. So there could be a debt fund, which does not invest into equities, to funds which are 100% exposure to equity, and some balanced also in between. So depending upon the risk appetite, one can also define or decide to switch money, which is existing in the policy, into another fund from one fund. The biggest advantage is this is not an exit from the policy, and therefore does not have any implication, like it is not counted as exit, and therefore no tax implications, etc., even if the base policy was taxable. So it's a tax efficient way of moving from different funds, moving between different funds, with changing risk appetite or needs or the market modes.
Perfect. So I think we've learned new things about ULIPs today. We are coming towards the end of the scripted question and answer, so as to say, and we will open it for the audience. So please keep asking your questions. I just tell my panelists that we have about 1,500 plus audience listening to us live. So we are a great hit. Now, my next question to you, Neha, is that you spoke about starting young, and children are not taught financial planning in schools. Financial planning as a topic, tends to be very boring, very difficult. So, do you have any tips and tricks of how one can start financial planning for kids? How can we simplify that?
So for kids, I think we should start as early as possible. Like, for example, if your child is 5 year olds, then also you can start taking them to grocery and telling them we have this much budget and we have to buy this much stuff. So you are starting at the age of 5, which is very small. And we actually think this is something very difficult for child, but child learns very quickly. I have a daughter of 1.5 year old and she surprises me every day. Sometimes I feel isko ye samajh mein nahi aayega, and the next day she is doing the same thing. So we have to immediate we have to act before them what we want them to act on, right? So we have to discuss money with them as early as possible, and we need to involve them in our grocery shopping. This is a very easy and very fun activity to do with your child. Apart from it, there are multiple application, multiple games available in the game stores. You can buy such type of games like Monopoly we used to play. So they start learning about the concept of business. You have to take something. If you want to take something, you have to give something also. So these concepts can be introduced as early as possible, and then when they achieve their age like 10 or 12, you can uh, start you can open a savings account for them and let them operate it. Give them some amount of money and let them make decisions for themselves. And what one of the biggest mistake our parents did with us, they tried to stop us from making mistakes. So I want to tell newer parents, let them make mistake and let them learn by themselves, and they will be very confident in their lives. If you are letting them learn, letting them make mistakes, and letting them manage their own money, whatever pocket money they have, give them. And the most important thing which I'm missing right now is you need to tell them what is need and what is want. This is the biggest problem current generation is facing, right? We are going on Instagram and we are seeing only 1% or 10% of life of a influencer, where she is going to a hotel, premium hotel, where she is taking vacations, she is wearing good clothes, she is having a iPhone also. So this is only 10% of her life. So there was a YouTuber who used to post videos of expensive cars, and later on, when there was a controversy around some another issue, so his parents revealed that his hello so his parents revealed that his all the cars were on rent, so they were not their own cars. So because nowadays when everything online is so glamorous, so up to like elite class and everything, now people who don't have a lot of money also try to cope up with them, and that is a big issue. If you want to buy a 2000 rupees ka shirt, or if you want to buy a fridge, everything is available on EMI. Easy quick loan, एकदम घर पे डिलीवरी हो जाएगा, सब कुछ easy है, because of which we are overspending. The main reason was because we don't know what is need and what is want. So from the very beginning, we should teach our children that okay beta, this is actually our need and this is actually a want. And it's not easy to differentiate between the two, right? If you want to buy a phone and you have the money, then you may buy iPhone. वो अब नीड है आपकी, वांट है, वो आपको डिफरेंशिएट करना पड़ेगा. बिकॉज अगर आप उसे 10,000 20,000 चीपर फोन भी लेते, वो भी आपकी नीड को फुलफिल कर रहा था. तो it again comes into the category of wants. So this is a quite complex topics, needs versus want, but we should learn by ourselves first, and then we should teach our children from the very beginning.
That's a great concept to have, need versus want. I think that's something that I will pick up today from the webinar. Shalini, my next question is to you. What is the advice that you give to parents who are bringing up, young children? How should they plan for the finances?
Okay. So first of all is that a parent should improve the relationship of money with, they should teach the art of improving the relationship with money. So when I say relationship, it is to become more responsible. Invest in your child's skills, education, give them the best you can, and tell them that they have to keep enhancing it further, because जब तक wealth और money create नहीं होगा, आप उसको कैसे save या invest और ये सब बातें कैसे करोगे? So सबसे पहले वो art सिखाना है कि वो financially independent कब कैसे बने. जितनी जल्दी फाइनेंशियल इंडिपेंडेंट बच्चा बनेगा, उतनी जल्दी वो अपने पैसे को संभालना सीखेगा. ठीक है. सेकेंड थिंग इज दे शुड लर्न द रिस्पॉन्सिबिलिटी, they should be responsible toward credit usage. I heard Neha speaking so many times about EMIs on phones and all. Make them understand why it is important to intervene first and understand what this credit or this borrowing is going to take away from them. Those small EMIs might look very small, but in the long run, how much value is going away? You're losing on the rupee growth, the small growth of your funds and all. Plus, if they are skilled, they are smart, that how much credit usage they have, they'll be able to plan their money better. Cash management is the third thing they should learn. Cash management by smart budgeting. Budgeting in small expenses like taking things on EMI, Wi-Fi, on their mobile phones, bills which come. These are small little things which can help you create value, right? Explore that why your telephone bill is coming higher. If I can switch into a scheme which can give me more of usage in a lesser cost, right? So these small little things, plus the power of compounding, why it is important to save. Now, I'm going to talk about one of my favorite subject again, the saving versus investments. Most of the children are still not aware what is saving and what is investment. These are two different subjects altogether. As Neha talked about wants, and similarly, saving is something else and investment is totally something else. And there are different asset classes which cater to these two groups. So that kind of an awareness a child might not have. We have to tell them that what is the kind of returns and expected. Then most important, short-term versus long-term vision of your value, of your wealth, of your net worth. How you should be planning this. A mother, a father, a parent can only do it. Nobody else will come forward and teach your child this. So start early, as she said, start early teaching them the art of just not saving, but the art of analyzing and be smart, and also capturing the availability of information around, and then smartly channelizing it to your requirement. Because अभी जैसे नेहा ने कहा कि कितना इंफॉर्मेशन उसके ऊपर है, बट क्या वो इंफॉर्मेशन को समझ कर अपने तरीके से उसको इनकलकेट कर पा रहे हैं अपनी रेगुलर एक्टिविटीज में या रेगुलर फ्लो वर्क में, वो इम्पोर्टेंट है. हमारे लिए क्या सही है वो हमें पता है, ठीक है. वो हम अपना पहले एनालाइज करें, हमारा गोल क्या है, मुझे कौन सा एसेट क्लास और कौन सा किस तरह का मेथड सूट करता है, उसको एनालाइज करने में आपके पेरेंट्स बच्चों की हेल्प करते हैं. हमारे पेरेंट्स ने भी की, एंड आई एम श्योर हम अपने बच्चों के साथ भी बैठ के ये चीजें बातें डिस्कशंस होते हैं. सो हैव जैसे हमारा हर फैमिली में एक डे होता है कि अगर आज एक हॉलीडे पे हम हमारा टॉपिक रहेगा, इसके अलावा हमारे लिए एक दिन होता है, हम अपने फाइनेंसेस और उसके ऊपर गोल्स के ऊपर बात करते हैं, कितने नजदीक हैं हम उसके, कितने दूर हैं. आई मीन मे बी माई प्रोफेशनल गोल और माई चिल्ड्रन हैव सम professional goals or their personal goals, like even if it has to do with health or something. So I think encourage your children to come out so that you understand them as a personality. What are their thoughts? Encourage them to talk more on these subjects. This is my suggestion.
Perfect. Thank you so much. And Neha, before we take the audience questions, my last question to you is, for financial wellness, what are your top 3 tips?
Okay, so long time ago I read a quote उसमें लिखा हुआ था कि the best customer is the unhealthiest one. Once you are unhealthy, you are the best customer for everyone, like for hospital, even for fast food chains also. So you have to be a healthy person first, then only you will be able to become a wealthy person. So you have to focus on your health first, and then when you take control of your health, then start taking control of your finances as well, and have a financial plan with you, like where are you right now and where you want to go. अगर प्लान ही नहीं होगा तो आप कहीं पहुंचोगे भी नहीं. So if you want to be somewhere, like if you want to be financially independent, then you should have a plan for yourself. And apart from it, you should, because we were talking about wants and needs and how glamorous the internet world is, you need to have control of your spendings. Track your spendings every month, if not possible every week. Track it every month, and track it yearly also, ki what you have done this year and what earlier you were doing, how far you are from your financial goals. So these three tips.
Thank you so much, Neha. And now I will open up to the audience questions. I will take one question at a time to whichever panelist it is for. My first question is to you, Neha, and comes from Renuka. She is asking you, what's the ideal emergency fund size of a small household? I live with my husband.
So it depends on your income or your expenses. So there are two ways of calculating your emergency fund. One is you can calculate through your total income, like for whatever total income you have of your family, uska 3 times you can do, और उतना अमाउंट आपके पास हमेशा रेडिली अवेलेबल होना चाहिए. दैट इज आवर इमरजेंसी फंड. रेडिली अवेलेबल का मतलब ये है कि कभी भी कोई इमरजेंसी आती है तो यू शुड बी एबल टू यूज इट एज सुन एज पॉसिबल. तो यू शुडंट इन्वेस्ट इट इन स्टॉक्स या एफडी या कहीं और पर. यू कैन कीप इट इन योर सेविंग्स अकाउंट और यू कैन कीप इट इन लिक्विड फंड्स ऑल्सो. वहां पर भी आपको थोड़ा बेटर रिटर्न मिल जाता है फ्रॉम अ सेविंग्स अकाउंट. Second way of calculating is according to your एक्सपेंडिचर. लाइक 3 महीने का जितना भी एक्सपेंडिचर है उसका 3 टाइम्स आप कर सकते हो. मंथली एक्सपेंडिचर का 3 टाइम्स आप कर सकते हो. वो जो अमाउंट आएगा वो आपको रखना होगा अपने पास. Subarna?
Yeah, sorry. I think the screen is frozen at my end. I'm so sorry. Can you hear me? Hello, am I audible?
Yes, you are.
Okay. Thank you so much, Neha. Chinmay, the next question has come to you from Arpit. आपने बताया CPRSH है. Which plan should I take, or what does Max Life have to offer, which covers all of these aspects?
Okay, so all of these aspects, so one is that each plan has its own characteristic, but if you were to cover all CPRSH, is it possible? The answer is probably yes, to an extent. If you combine riders, okay, riders are basically baby plans or smaller elements of protection, which you can add to a saving plan. So to a saving plan that you buy for yourself, you put up rider to protect from death, you put up a rider to protect from accidental events, you put up a rider for critical illnesses. But one golden mantra which I have learned in my life is that your financial planning is not complete unless you have a distinct instrument for each financial goal of yours. I mean, आप ये नहीं बोल सकते कि मैंने एक एफडी बना के रखी है या एक म्यूचुअल फंड है, उस पैसे को आई विल बी यूजिंग फॉर 4 different needs. Earmark each instrument to a specific goal or multiple instruments to one goal. हर एक गोल का अपना अपना अलग अलग मैपिंग होना चाहिए. जब तक आप वो कर पाएंगे उस दिन आप बोल सकते हैं कि yes, my financial planning is complete.
Okay, thank you so much, Chinmay. Shalini, the next question is to you from Pragita. She is asking, how much saving is an ideal saving for a woman?
So after your people go reverse. They make the expenditure first and then do the saving. I think you should have a tank and a bucket approach towards your saving. As Neha said, put all your money in a liquid fund and then accordingly fill up your buckets for your basic expenses so that the remaining money which stays there at least is growing, and then you can move it to whatever high equity instruments or wherever you want to, or even pay your premiums for your regular investment plans. Average, we encourage our customers to save at least 30% of their total annual income, which is divided into three basic stuff: short term, okay, midterm, short-term goals, midterm goals, and long-term goals, which is 10%. Depending on the age of the customer, if the customer is like in the late 40s, the expenditures are going to be higher. Children education part for short-term expenses meetings would be gone. So there we increase the retirement part, the long-term goal by 20%. So we keep hedging this depending on the age of the customer on regular basis. For a youngster, this can be as high as 60% of saving because there are no such responsibilities to pay off any housing loan, EMIs, or other expenses. This 30-35% is good enough after taxation. I'm talking to splurge and enjoy your lifestyle. The remaining should go into savings, which would be characterized into short term, mid term, and long term. So it depends all on the age of the customer.
Perfect. Thank you so much, Shalini. Chinmay, there's one question to you from Abhay. He's asking, I'm a fitness enthusiast. Does Max Life offer anything for me to take care of my health and wellness?
100%. So we have a special plan which is all around health and wellness, which is called Seva. This plan not only covers you for important health events in life, but also rewards you for being fit and taking care of your physical wellness or mental wellness. Right. So for the first time, there's a plan which rewards you for taking a health checkup. So we used to say that typically when you take a health checkup, you pay money. For once, you go for a health checkup and we will pay you money. Right. So it is there. So I would request consulting a Max Life advisor, or Shalini is there on the call. Yeah.
Thank you so much, Chinmay. Neha, the last question has come to you. This is from, again, Ruchita. She's asking that I am starting my new business. What tips do you have for me so that my finances are secure?
So to secure finances, you should definitely have a budget for yourself, because sometimes business may require some amount of money from your savings as well. So you should have a proper budget for yourself, that you prepare well for your savings also, to be used in your business or to be used somewhere else also. Apart from it, take health insurance. There's a compulsion, you should take health insurance for everyone in your family. And once you start your business, you should take a term plan also. If not taking any other comprehensive plans or life insurance plan, please take a term plan as early as possible, because when you take early, your premium also get reduced, because if you are taking it later on, like 5 years later on, premium amount would be much higher. So take your life insurance as well. And then of course we talked about emergency fund. And then we can, if you are saving a lot of money, apart from your emergency fund, apart from your daily expenditure, then you can start looking for investment options, and that has to be goal wise. So don't blindly invest for, like, you are investing 15,000 SIP and you are doing it for the long term, but you should have in mind, why are you doing this SIP, which goal, for which goal you are doing this kind of SIP or FD or anything. So invest as per your goals and start educating yourself about more investment products. There are multiple products which gives more returns than FD and lesser risk than stock market or mutual fund. So there are bonds, there are multiple products, multiple government backed bonds as well. So start yourself educating about investment products as well.
Thank you so much. I think we've come to the end of today's session, sadly so. There's so much that we've learned from all of our panelists today. My biggest takeaways would be, goal-based planning. Life has an if in it, so we should plan for that. And definitely we should have all the buckets of a life plan so that, we can put our finances and savings in it. Thank you so much. I sincerely hope that our audience benefited from today's session. I know I have. Again, thanking you, Neha, Shalini, Chinmay, for giving us the time and connecting with us. Here's Subarna signing off for all of you. Thank you so much. Have a lovely day.
Thank you so much,
So
everyone.
much for having us here.
Thank you.